Well, this week the very exclusive club that's the ASX Top 10 got a new member, Newcrest Mining. Australia's largest gold miner completed its takeover of Lihir Gold, the number 2 player, with interests in Papua New Guinea and West Africa. The union creates a company with a market capitalisation of $29 billion and is the 4th biggest gold miner in the world. I spoke to Newcrest boss Ian Smith, who's engineered a remarkable turnaround in fortunes for the company in his 4 years at the helm. Well, Ian Smith, you must be reflecting now that it was a good decision to close down the gold hedge book 2 years ago, because you wouldn't be doing this, wouldn't be taking over Lihir if you hadn't done that, wouldn't you?
No, it's been a very interesting 4 years since I joined the company. Closing down the hedge book was a momentous point. Up until that point, when I first joined...
What did that cost you? It was about $2 billion, wasn't it?
Yeah, around $2 billion. When I joined 4 years ago, we had over $1.6 billion in debt, over 5 million ounces hedged. And most of the prices on that hedge were about a third to a quarter of what we're getting today. So to close down the hedge book was, in hindsight, a very good decision.
So tell us about the reason you've decided to take over Lihir. What was the strategic thinking about that, just apart from just wanting to get bigger?
Really, if you want to build a company, and especially in the context of the gold industry, if you want to have a sustainable long-term company, then you've got to build that company on the back of first quartile costs, long-term assets. So we've got Cadia Valley, which is a 30, 50-year asset at least. Telfer, which is at least 20, 25 years. Lihir Island, which is 30, 40 years. Wafi Goldpoo and the PNG assets. Wafi Goldpoo looks like being 20, 30 years at least, and the Mosi district will grow into that. They're the types of background points that you need to build a company on. And then Bonikro, with 18,000 square kilometres, is some of the best greenstone in West Africa. The upside that we've got in Indonesia, the upside that we have around our sites and in PNG, means that we can really grow the company but have a sustainable base.
So your production now, Newcrest plus Lihir, is about 2.7 million ounces a year, I think.
It'll be around 3 million.
What do you think it'll be in 5 years' time? What are you targeting as production?
Well, if you put the current publicly stated forecast together, in 2014 we'll be producing around 3.75 million ounces.
And where will the extra 750,000 ounces be coming from? Is that just from Australia, the expansions of existing mines in Australia, or will you have new mines?
Yeah, Mopu, which is the 1 million ounce upgrade at Lihir, will lift their production, plus we're developing Cadia East at the moment, which will lift production out of Cadia Valley. The Hero pit at Bonikro will lift their production, and the Hidden Valley is going to lift over time as well.
Now, you've been talking a little about possible M&A activity and mergers and so on, because you've got a huge amount of cash with gold at $1,200 an ounce and all this production coming through. Are we talking about mopping up intermediate-sized producers around Australia, or are we talking about another big play like Lihir?
Yeah, I was asked about what gearing level we'd be comfortable with, and I said if there was a great opportunity, we'd be comfortable going to 15, 25% gearing, which still keeps us in BBB plus territory. Where we position ourselves is there's 2 areas of M&A. There's early entry M&A, which we'll continue to do. We've just announced further early entry M&A in Sumatra.
By which you mean explorers?
Yeah, we buy in so we can apply our expertise in exploration and build assets. It's only when something comes along like Lihir, which gives you a long-term first quartile opportunity that you can really build on, where we'd get into the more mature M&A opportunities.
And do you think you'll focus, in terms of your future growth, around the Asia-Pacific area, or will you spread it between Asia-Pacific and West Africa?
We think there are great opportunities in this part of the world, and compared to the Americas, there's a lot less competition for some of those assets. So we see this area as a further growth opportunity. Bonikro, as I said before, with 18,000 square kilometres, that is
in West Africa.
That's in Côte d'Ivoire, Ivory Coast, West Africa. That's a great opportunity with similar country to Kalgoorlie, Imagine owning 18,000 square kilometres around Kalgoorlie.
But the mine in Indonesia is quite rich, isn't it? It's richer than the ones you have both here and even richer than Lihir.
Yeah, it's the second richest epithermal or narrow vein type production point in the world. We're hopeful that we'll have a second mining front open there by the end of the year, so that's continuing to expand as well. And we've picked up some areas in Sumatra that are similar or look the same as Gossamon, which is our operating mine in Indonesia already. So there's other opportunities there.
The other sort of metric, as it were, with your business is the gold price, which clearly is quite high at $1,200 an ounce, largely because of fear about the world and what's going on with the world. Do you think that it may be in some kind of bubble? Or do you think the price is sustainable?
I don't think it's driven by fear. I think it's driven by recognising gold's rightful place as a risk leveller. So people see gold as part of a portfolio now to be a legitimate part of how you address risk going forward. Half the pundits say that going forward we're going to have inflation. Another half of pundits say we're going to be facing deflation. Gold is a good part of portfolio risk management in both of those environments.
But one of the reasons the price is high, and in fact one of the reasons it's stable, is because the production has been constrained. And now with the price of $1,200, there's a lot of production coming onto the market. Are you a bit concerned that at some point the market will become glutted?
No. Actually, over the last 5 years, production has been dropping. It's only this year, next year, that production will kick up, driven by production out of Australia. So Newmont's mine at Boddington coming in will lift Australian production. What we've been doing at Telfer, what we'll do with Cadia Valley will lift Australian production. But overall, the trend on production for gold around the world is going down.
And what about the reserves that are held by central banks? Do you think that they'll come onto the market?
Over the last few years, there's been a European bank agreement that they can only sell a maximum of 500 tonnes per annum. They've never hit that target. Last year, I think the net gold sales into central banks amounted to 50 tonnes. This year, people think it'll be a positive. So central banks will actually take in more than what they sell.
So if the price keeps going, even if it stays where it is, you're going to start giving more money back to shareholders, either as dividends or buybacks? Or you're going to just plough it back into the business?
We've been lifting our dividend structure over the last few years. So traditionally, Newcrest just had a set, very low dividend. We've told people now that we'll assess our capital position every 6 months and go forward with dividends on that basis.
And what about other capital management tools such as a buyback?
At the moment, with the amount of projects that we have on hand and whatever, we think the combination of dividends plus growth is what our shareholders are looking for.
Thanks for joining us, Ian Smith.
Thank you.